DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
What's up, guys? Real quick break here to tell you about the DeFi by Design podcast sponsor, 𝗷𝗍. 𝗷𝗍 is a non-custodial, trustless, decentralized money market protocol which is leading the DeFi charge. We know 𝗷𝗍 as the workhorse of DeFi with their A tokens, allowing you to earn interest on about 10 or 20 DeFi tokens by using app.𝗷𝗍.com. Again, that's app.𝗷𝗍.com or just 𝗷𝗍.com, and then you can get redirected to the protocol. Basically, what you can do on 𝗷𝗍 is you can earn interest by putting your assets into the protocol as a supplier, right, as a lender, and then you can also borrow against your assets using them as collateral to long or short tokens, earning interest when you do the borrowing as well. So you can actually earn interest by supplying and borrowing assets on 𝗷𝗍. So check out 𝗷𝗍.com, give it a try, and see what it's all about. We use it all the time. And yeah, that is our DeFi by Design podcast sponsor, 𝗷𝗍. Thank you very much, guys, and let's get right back to it. What's going on, guys? Welcome to DeFi by Design, episode 11. We are here with a special guest, Qiao Wang. Qiao has been a Twitter presence, tweeting away. His Twitter following has definitely been growing over the past few months. A lot of takes on DeFi and markets and all sorts of stuff. And we've been in a really interesting market right now, Rob. It seems like over the last few weeks, there's just been all sorts of bad news. KuCoin hack, you got the USA cracking down on BitMEX, all sorts of stuff going on. How you feeling today, Rob?
Yeah, man, I'm feeling good. I'm feeling hype for the future. You know, Qiao said something really interesting before, we'll get to more conversation in a second, but it sounds like everyone's fearful. Everyone's kind of worried. You know, regulators are clearing house. They're going after McAfee. They're going after BitMEX. There's blood in the streets, but from what we know, that's the time to buy, right? So we won't get into too much speculation on prices today, but I'm still here. We're still around. I'm excited for the future, to say the least. So I'm excited to have Qiao on today's podcast. And I followed him on Twitter for a little while, and now we're talking face to face. So I'm excited to hear his thoughts on the markets and everything, DeFi and crypto. How you doing today, Qiao?
Good. How are you guys?
Good.
Good.
Yeah, man.
Yeah, staying alive.
Staying alive.
Corona. Trump got Rona. Uh-oh. And then he's back at the White House with no mask on. Here we are. 2020. Here we are. Oh, yeah. Hey, so Qiao, a little brief intro. From what I know, and I'm sure what the audience knows, you've been trading for a while, in and out of different markets, crypto and all that stuff. Talk a bit about, your background, if you will, and kind of what you're up to nowadays.
Yeah, I've been involved with the crypto community for many years. Back then, professionally, I was a quant trader. So traded, U.S. equities, cash, ETFs, derivatives, futures. I did that for almost 10 years, but, crypto has always been an important hobby of mine. But early 2018 was when I, started building full-time in this space, in the crypto space. Was part of the founding team at 𝗵𝗶𝗴𝗵, which is a crypto data and research company. And, grew the company to about 20 people. I spent a couple of years there. But earlier this year, I transitioned out. And since then, I've been pretty much managing my own money. And also leading the DeFi Alliance. I don't know if you guys have heard of the DeFi Alliance, but it's basically like an alliance of various DeFi startups, VCs, legal experts, and especially trading firms, right? So they come together and provide mentorship, liquidity, knowledge network to DeFi startups. So I've been working on that for half a year now. So that's a little quick background about myself.
And still, you don't have a paid group yet. What's going on, Qiao? when paid group, man?
The saying goes, if you can make money trading, why would you do a paid group, right? I'm just happy to provide my opinion and thoughts for free on Twitter and through I used to do a lot of long form writing as well, but I don't do that anymore. I'm a little bit too lazy nowadays, but I spend a lot of time on Twitter and share my ideas for free. I think the ROI of sharing your ideas with the public, with the general public, is way, way higher than starting a pay group, to be honest. So that's that.
Yeah. I've always thought about it I've heard the same thing, why would you share your ideas when you're making money on your own? To me, it's about making friends, whether that's in Telegram groups or on Twitter, those are people you share your ideas with, and you can build together, right? And kind of choosing your friends wisely is definitely an important thing to do when it comes to investing and life overall. And just, creating your own ecosphere in a paid group, you can definitely channel some important thoughts, but it doesn't have the back and forth that I see in a lot of Discord groups and a lot of Telegram groups. So yeah, I'm not really a member of too many paid groups. Maybe one. That I can think of,
Got him. I think they're a bit too short-term oriented. That's the thing that gets me, is that it's a lot of short-term thoughts, a lot of short-term trades, a lot of short this, short that, make a lot of money fast. And I think Chad can tell us, like, your thesis as far as investing, trading, it's got to be around the long term, right? Like your idea for creating a powerful system and whatnot.
No, I mean, you can make money across the entire spectrum, right? From sub 1 microsecond all the way to 1 decade time horizon. You can make money across the entire spectrum. But the point is, I guess, on the pay groups, right? Like the short-term trading, number one, there's a lot of slippage. Like if you follow the pay group leaders, I mean, unless you trade Bitcoin, which is fine. Like there's very little slippage, right? But if you trade the shitcoins, then the leader is going to get in the position before you do, and they're going to incur a huge amount of market impact, especially if you're behind your 50 other peers in the pay group, then you're going to incur a huge slippage. That's number one. Number two, like the short-term trading, especially when it comes to like pure technicals, right? Like by technicals, I mean like your decision is entirely based on price and volume. Then that stuff can be automated. So like, why would you spend so much time like watching charts all day if you can just automate your entire trading? I mean, I say that because I have an algo trading background. I know for a fact that everything that you can chart can be automated, right? Can be programmed. So, programming a strategy is much more fun, to be honest, for myself, right? Than like watching charts all day. Obviously, like if you do long-term trading, the charts, sometimes they could be useful, I guess. Because for long-term trading and investment, you need to combine a variety of factors, not just like a price and volume, right? You have to combine also that with fundamentals. So the technical part of long-term trading isn't that important. And therefore, if you do try to program it, then it may not be that statistically significant. But anyway, my point is, you can make money doing the entire spectrum of investing and trading. I personally do a combination. Like I like long-term investing and I like short-term trading as well, but my short-term trading is just automated.
Yeah. I mean, the fundamentals outweigh the technicals, as you said, in any sort of long-term thing, but it can be tough to hold long-term in positions. I mean, I would imagine that you have a longer-term idea for all the DeFi coins or the ones, that you're a fan of, and seeing the market for the past few weeks, it busts some people's balls. It's like, crap, here we are. Dump. What is your view on not just the market in DeFi, but kind of where the long-term goal is, or where the long-term thought process is for the DeFi market? Like, what do you think it's trying to accomplish? And like, how's it going to happen, if you will, over time?
I mean, as things currently stand, let's be honest, DeFi is a fucking casino. It's a global casino. It is what it is, right? Like, people talk about banking the unbanked, but that's not happening right now. But it doesn't mean that it won't happen. Every great thing that has ever happened in the history of technology started as some kind of toy, right? And DeFi currently is a toy. And, smartphones, computers, personal computers, all these things started as very, very expensive toys. And we saw that in the last few months, right? Like in yield farming, in all these shitcoin swapping, all that stuff, it was very expensive. Like the Ethereum gas was very expensive. These were like very expensive toys for only a few people. And by a few people, I mean like maybe a few thousand people, right? Like that is the daily active user number for DeFi. But as time goes on, as we improve the technology, the underlying technology, the scalability, and as more entrepreneurs come into this place, especially from like Wall Street, like there's so many like Wall Street people coming to DeFi nowadays, we're going to bring the cost down. And over time, these products can be used by people who need, actual financial product for their, day-to-day life, or for like entrepreneurship, right? There are things that in DeFi that are, that currently look like toys that I'm super excited about in the long term. are things like under-collateralized loans, right, that people can use for starting their business, right? There are also things like synthetic assets, right, providing access to people all around the world to high-quality assets, like especially like U.S. equities or gold or bonds or something like that, right? Like these things are super exciting in the long term, but as things currently stand, they're a global casino. That's how I view this market, and it's going to take a while to ultimately get to the or reach our goal of banking the unbanked, or whatever goal, long-term goal you have for DeFi. It's going to take 5, 10, 20 years. And it's not surprising if you look at the history of Bitcoin, right? Bitcoin started 10 years ago. And to be honest, Bitcoin it has vastly exceeded my expectation within 10 years. But it still took 10 years to get to where we are today, where a bunch of macro investors are finally piling into Bitcoin, and then corporations and then family office and the hedge funds are buying Bitcoin. It still took 10 years. So, DeFi, for the same reason, it could take a while.
Yeah, I'm super excited to see where the concept of synthetic assets can take us. I think we can really get access to markets that people might not even have seen because they're just, a couple layers deep. And then after playing with these toys, for a little while, we'll kind of discover what can be a market and then use those financial instruments in all sorts of creative ways. That's really what I'm excited about. The APY and the yield farming, it sounds like you're maybe not as hype on that long term. I'd like to hear your thoughts, because I've heard Vitalik himself say, the rates that are present in DeFi, they're eventually going to just scale down to the rates that, we can get at any centralized institution. So I'm curious, do you agree with that? Or do you see kind of a more extravagant solution that DeFi can solve with respect to APYs, maybe including synthetic assets or not, just with respect to yield farming?
Yeah, of course, the APY is going to go down. It has been going down. And right now, it almost reached a single-digit percentage, right? And it might continue to go down. The thing is, in the long term, markets are fairly efficient. If you have like a 50% APY with very little risk, then money is going to pile in. And we saw that over the last few months with USDT growing. Like, there has been a tremendous USDT growth. And I think a lot of that has to do with yield farming. And also WBTC, 𝗵𝗵𝗃, right? Same story. 𝗵𝗵𝗃 took off when yield farming took off a couple months ago. So all these, yield farming activities are not going to be sustainable, or I should say, the yields are not going to be sustainable. That's for sure. But at the same time, the yields are not going to go to zero, because there's still risk involved in these yield farming activities, right? Like smart contract risk, especially in the case of pseudonymous projects, there's a non-zero risk. So the yield has to reflect that risk. So it's not going to zero, right? It might stabilize around 5 or 8 or whatever. I don't know. And by the way, the yield also depends on whether or not we're in a bull market or bear market. So in a bull market, the stablecoin yields can get fairly high. And in a bear market, the yield on Bitcoin and Ethereum can get relatively high, right? And the reason for that is, in a bull market, people leverage USDT or stablecoins to buy Bitcoin, Ethereum, and other crypto. And that pushes the yield on USDT up. Whereas in the bear market, people have to borrow Bitcoin, Ethereum, and other crypto in order to short them, right? So that will push the yield on Bitcoin, Ethereum up. So there's a lot of factors that go into this, but long term, yield will probably go down a little bit more. But this can take many years, right? But long term, it might go down slowly, but it's never going to zero. It's never going to like a U.S. Treasury kind of yield.
Yeah, the 10-year bonds or whatever it is are just ridiculous right now. Every other week, I'll get a screenshot from my dad of it. He'll be like, "Yeah, check this out. I'm like, "Oh man, here we are."
Yep.
I put a tweet out on DeFi site the other day. Actually, might have been yesterday. It was like, so if no one's buying CRV, where does all the yield come from? And I'm genuinely curious what you guys think about that, because really, Curve had provided so much yield to the market with their token launch, and obviously it's just gone down extravagantly just because of the inflation and of how iron farms it and dumps it, right? But there were some people who were buying CRV tokens because they thought it was going to go up, because it was Curve finance, because it was Curve, it was great. But really, those people were the yield for what Iron was getting their users and other platforms were getting their users. So if the entire market knows that CRV is always going to go down, if that's the case, now that's a bold statement, but that's been the case, then where does the yield come from for Curve? Do you guys have any ideas on that? Like how is that going to work? Like who is buying Curve right now? CRV token.
Rob, do you want to go or do you want me?
Yeah, I mean, I can try to take that. So as far as I know, there is still an amount of total value locked that is kind of like adhering to their bonding curve, as far as I know. And then because of that, it's producing a yield from the people that are, taking out loans and contributing to the pools on Curve. I might not have the best understanding of it, but, there is still some yield. And that's kind of what Qiao was talking about, I think, where, right now we're in a bear market. People aren't really leveraging their stable coins. So that total value locked is going down. But there are still people that are lending and borrowing on that platform. And that's, where the yield comes from, albeit still, much lower than it had been in the past. That's my understanding.
Yeah, I mean, a couple months ago, I mean, to Rob's point, like the vast majority of yield came from these farm dumping these governance tokens. That was by far the vast majority of the yield. Now that part, I don't know what it is currently. It might be like 10% of the entire yield. I mean, I have no idea. It's order of magnitude. So the vast majority of yield currently comes from margin trading, right? So leveraging a stablecoin and for margin trading. That's it. That's where the yield comes from. And over the last couple of years, the yield on margin trading have been fairly consistent, right? Like, I mean, by consistent, I don't mean like it stays at 8%, but it ranges from like, I don't know, maybe 3 to like 15 or something like that. The reason why I know that is because that's the yield that you get on the centralized OTC desks, right? Before this, all this yield farming mania, that was the only yield that was out there for people to grab, and that was the yield that comes from margin trading. So as the yield farming mania dies, the yield on DeFi should also be in that range, right? It should be consistent with the yield that you get on centralized OTC desks for margin trading, which currently might be around 8, 9, 10%.
Yeah, and I think if that is what the yield or APY is, like if it's in that range, 8, 10, 20%, even close to 50 or 100 for some new projects, then they'll be able to have a chart that doesn't look like curves. But from everything that I've looked at and every farming experiment essentially that's launched, there's been the people who get in really early, then there's a pump of the asset where the APYs get shot up, and then more people find out about it, they hop in and start farming, and then it's just farm and dump, farm and dump, farm and dump, and then it continuously goes down. Now, there has been an exception to that. A few of them. Recently, there have been experiments with deflationary yields. So basically, you have a token, and every time there is a liquidity provider on Uniswap, and this is how Core did it, which absolutely just went nuts. Basically, they lock your LP tokens up forever. So basically, you can't get any of your LP tokens anymore. So effectively, those core tokens that you put in there are now gone. Like they're burned. So that supply is gone. And so that idea might come about more. But yeah, I'm kind of wondering if this token distribution mechanism of farming, like whether it's a deflationary or low APY or high, like I get the fair launch idea, but I'm not sure if that's ever going to actually work out. Because, I mean, the farm and dump idea is just like, it's too appealing for people who just want to make short money and invest their funds back into Ethereum or back into other coins that they would rather have. Like this idea of fair launch farmed distributions, to me, I mean, it sounds all good in paper, but so far it really hasn't worked out. I don't think how people have wanted it to.
Yeah.
Yeah. I don't know. It's interesting. And then you've got the whole core thing was interesting. It's been a bit of a journey. So a bit on the mental side, if you will, how do you, Qiao, keep up in terms of keeping your mental straight and mind kind of on the game? Like what's your routine or, how do you keep yourself apt to, stay on top of everything in the markets, out of the markets? Just how do you stay, on the ball? For other entrepreneurs out there, other people who are trying to build, what?
This is a very good question. I don't I don't have a routine or anything like that. I have so many interests, obviously primarily in crypto, but also even outside of crypto in macro and stuff like that. I just follow whatever that I'm interested in, to be honest. The reason why I said this is a really good question is because it's actually impossible to keep track of everything in DeFi. Or it's even impossible to keep track of everything for one given project, to be honest. There's just so much happening. Like, yeah, we're in a bear market, but the fundamentals are actually improving. People are still building. The TVL have been going up, even though the prices have been going down. And so it's not possible to keep track of everything. So I guess my advice, if you're a trader or investor, my advice is pick your game. Pick the game that you're good at. It's impossible to play every single game. But that's the nice thing about crypto is there's so many games you can play. And you don't need to play every game. You just need to pick a game that you're good at and then stick to it. Be really good at it. That's my advice for investors and traders. But when it comes to builders, entrepreneurs, it's different. Like, traders can switch their attention every other week, but founders, they cannot do that. They have to pick one game. Like, they have to pick one project, one vision, and really stick to it for many years, right? Like, we can see it from the all the blue chips that in DeFi that really rose to prominence in this cycle. These are projects that started in the last cycle, right? It took them many years to build. Synthetics, 𝗵𝗶𝗴𝗵. 𝗵𝗶𝗴 is from like 2016 or something, right? It used to be called ETHLand.
Same thing with Maker.
Yeah, same thing with Maker and Synthetics. Like, Synthetics raised money in 2017 or something like that, right? So it takes many years to build a really good project, but it's worth it. Consistency and determination is what matters.
And how do you manage that when it comes to different asset classes? Because that's one of the things that I've kind of struggled with personally is, not just capital-wise, but like effort-wise and focus-wise, spreading myself too thin across different markets and different asset classes. You sound much more experienced in the trad and legacy markets. Do you kind of play the market cycles? Do you focus on, things when they're going up? That's when you kind of play that game? Or, are you more focused on one game in particular and then, sticking to that, whether it's algorithmic in the short term, more intuition in the long term? What's your spread like between legacy markets, crypto, and these DeFi casino games?
Well, currently I'm probably 90% in crypto. But the thing is, again, this split really changes over time. I don't really know. But earlier this year, I was so obsessed with macro because of COVID and all that stuff. I felt like I had an edge because I understood COVID better than the vast majority of the market. And I was really obsessed with the macro. And that's how I missed the first 3x in DeFi. Right? DeFi actually did a 3x before the summer. So I missed it. But I guess I did decently well in macro. But then at some point, macro just became boring with all the QE, all the money printing, like policy, right? Like right now, the macro is entirely policy driven. If you know what Washington is going to do next, then you're going to make a killing. I don't have an edge there. So I switched gears, I guess in the summer back to crypto. And the first thing I saw was, to be honest, I was earlier this summer, I was still skeptical about DeFi. I was long-term bullish, but I didn't know that it was going to happen this soon, right? But I just spent, my entire time digging into DeFi and play around with the products, and then I realized, holy shit, this thing is real. It's still early, but it's definitely real. And with the compound yield farming, I saw that it was probably a inflection point. At least in hindsight, it's an inflection point for the entire DeFi space, and especially the yield farming casino game. I guess the main point is you have to know when to play a game and when to stop playing. You have to know whether or not you have an edge. That's more important than playing the game itself, to be honest. Like, picking the right game to play is more important than playing the game itself. I feel like I've been following crypto for 8 years. I like to think that I have an edge in this market. I understand this thing better than the rest of the market.
Yeah, I like to think that just understanding what DeFi is and having used some protocols and just understanding that this market even exists in the first place, like not just crypto, because everybody knows
that crypto exists. But just knowing that yield farming is a thing, and that you could, and that these coins exist that we just mentioned, like that to me is still an edge. Now, it might not be an edge in a year or two, but I feel that the timing of one's entry and exit into these games, as you're saying, is the biggest edge, and picking the right one. And yeah, it almost feels like this is crypto 2.0 or something like that. I think I saw one of your tweets. You made a bold claim that that being in DeFi pre-2021 is like a once in a decade opportunity.
Yeah, I mean, it just, for me, DeFi is one of the very few crypto narratives that's worth watching in the long term, because DeFi actually makes sense. Why does it make sense? Well, ever since Bitcoin, you have some value. You have a frictionless way to store and to transfer value on a global distributed ledger, right? And that's Bitcoin. Now, the logical next step is basically think about how to swap those values, right? How to collateralize those values, how to lend those values, how to borrow those values, how to transfer the risk of those values on this global distributed ledger. And that is exactly what DeFi is, right? It's just a very natural next step. So I tweeted about this, but if you understand Bitcoin, there's absolutely no excuse for not understanding DeFi. It's really the same thing. It's just the logical next step. I perfectly understand why people would be skeptical of, let's say NFTs or DAOs or, some other narrative. I mean, again, I'm bullish on these narratives, but I can see why people are skeptical. But DeFi is the most obvious narrative. It's just the natural next step. So it's absolutely worth paying attention to this space in the long term, even if we're in a bear market.
Yeah, I mean, we've definitely said the words bear market a few times already, and I mean, it's been like a few weeks, and it's crazy how the cycle has moved so quickly from the summer till about a month or so ago, and then till now. Yeah, I mean, that like the whole be your bank thing, it started with the, obviously like the genesis of Bitcoin, and now it's moved all the way to this. And yeah, I mean, if this narrative is going to work and this idea is going to work, DeFi has to work, basically. It has to be able to, do that. It's got to. And one thing that there's a lot of people on Twitter that have been mentioning is this idea of retail traders, retail investors, retail this. I don't know. My take on retail is like it's here and it's not. It's there. It just kind of goes where the money flows. But obviously things change when retail enters the markets. From your experience, what has been the main drivers of retail? Obviously, massive price appreciation. But aside from that, what has been the main driver of retail? And what do you think changes when retail enters the markets? Right, like what dynamics change, whether it's on the technical side or fundamental side?
Well, the main driver is, to your point, price appreciation, period. There's no other driver other than the possibility of making 10x in your money. I mean, the question is, when will retail enter again, right? I don't think retail is entering again yet. I think they might enter once Bitcoin breaks 14K. And then 20K, I think there will be a qualitative change because 14K is basically the resistance or the high, the local high from last year, right? Is it last year? Probably last year or end of maybe a year and a half ago. And then 20K was the top in 2018, end of 2019, 2018. Once we break these like psychological points, retail are going to come in, I think. The thing with the next cycle is people talk about bull market and bear market, but I think it's very important to distinguish a bull market in Bitcoin and bull market in the rest of crypto, because I think the market currently is very much bifurcated. There are actually two different markets, very distinct two different markets. There's the Bitcoin market and there's everything else. Bitcoin is a macro play. The digital gold narrative is spreading like a wildfire among the macro investors, whereas the rest of crypto is all venture. They're all venture bets, right? Even the DeFi blue chips, they're still like very risky, right? They're just looking at their price action. So I think there are actually two different markets, and we're currently probably in the DeFi bear market, but Bitcoin, I think we're in a multi-year bull market, and so retail are probably the vast majority of retail are probably going to I don't know, pay attention to whatever rises the fastest. Unlike 2017. 2017, the retail, they had to buy Bitcoin first in order to buy the altcoins. But this time it's different because, from Coinbase, from Robinhood, the retail can directly buy the altcoins without having to go through Bitcoin. So this dynamic is different from last time, and we might see this dynamic in this cycle. And again, it's very important to distinguish the Bitcoin bull market and the rest, because I think this upcoming Bitcoin bull market might be the first one where institutions lead retail. Because in the last few cycles, Bitcoin has gone through like 3 or 4 cycles, and it has always been retail first. But for the first time, Bitcoin is liquid enough for institutions like family offices and hedge funds and corporations to buy a large amount of. So they may be leading retail this time. And they're buying like crazy right now. And retail are going to pile in after 14K and 20K.
So a little bit more to that point, as far as Bitcoin being, as far as Bitcoin having sufficient liquidity for institutions now, whereas that might not have been the case previously. First example that comes to mind is MicroStrategy, buying $500 million in Bitcoin. Andy and I were talking about this the other day, and I know the phrase sell side liquidity crisis is kind of a meme, right? Yeah. But in a sense, it seems like that could be a very real concept where there is plenty of liquidity, but that liquidity can evaporate very quickly if these institutions that are planning for the long term. We talked about long-term investing and how obviously that takes a different mindset than some short-term investing. These institutions are certainly playing for the long term. Do we see some sort of a liquidity crisis? And I don't mean that as a meme, but some point where Bitcoin, miners can only mine Bitcoin so fast. They're putting Bitcoin out on the open market, pretty much daily. But once institutions start scooping up a large portion of that supply, do you think there is a point where demand kind of outpaces the mining rate of Bitcoin overall? And is that really like a sell side liquidity crisis in that case? No meme intended.
It's a very hard question for me to answer. I know institutions are buying, some very large institutions are buying. I don't know the total amount, right? Like it's impossible to know. Maybe Mike Novogratz knows how much people are buying because he's connected to all these people who are buying. But I have no idea. And by definition, a price rise means demand outpaces supply, right? I don't know. I think it's going to take a while. 2017 was a sell-side liquidity crisis, right? The run-up from 1,000 to 20. By definition, that was a sell-side liquidity crisis. We're not there yet, but we could get something like that.
I guess in my mind, it is kind of a separate concept between FOMO, which really seems retail-induced, rather than something like a liquidity crisis, which could be more institutionally induced. And you already mentioned that you believe institutions could lead the way when it comes to the next Bitcoin market or the next Bitcoin cycle. So yeah, it is just a matter of kind of a wait and see. But if institutions do lead the way and they kind of scoop up all the liquidity, and then retail induces FOMO, that I don't want to provide anyone with too much.
We're getting a big hard on here. No, but you're not wrong though. If the institutions are leading, I mean that's what it seems like too, because your average friend isn't talking to you about Bitcoin, isn't asking you about. Some people are definitely trying to get in and whatnot, but there isn't this strong need. But it almost feels like every week there's some sort of new institution that's buying. Grayscale is updating their portfolio with another 100 million added, a new all-time high on AUM. That's kind of how it's supposed to be. That's kind of how it's always been. Not how it's supposed to be, but how it's always been. It kind of makes sense that, they would lead. Now, as far as that market goes, the institution and the retail, because all that leads to is the institution just completely just having to shill this all to the retail, and then they just dump all over everyone's faces. And that takes us to the zero-sum nature of crypto. Not only is there rug pull scams, anonymous people, projects that are just absolutely just getting wrecked left and right. There's nonstop shillers. There's everything. And this comes with all markets, but obviously in nascent ones like crypto, it's more prominent. So, Qiao, how do you feel about the zero-sum nature of markets? right? Like as a human being on this earth with a universe of people who are all kind of, one being and we're all one species, right? How do you feel about that idea of zero-sum markets and how trading comes into that, and how really like when we're trading markets and investing, someone loses if you win, right? And so how do you feel about that? And then on the end of that question, do you think there's any positive sum games in DeFi? Like, is DeFi introducing any sort of positive sum, whether it's airdrops or yield farming or anything, or is our markets only zero sum?
I mean, all markets by definition for me are zero sum in the short term, right? In the short term, if someone wins, someone loses. But it doesn't mean that all markets are zero sum in the long term, right? I mean, I don't think Bitcoin is a zero sum game. The ability to store some wealth in a way that's uncensorable, unseizable, that's positive sum. That's really like Bitcoin does something that no other asset can do previously, right? So Bitcoin is not zero sum. DeFi, well, short term, I guess it's somewhat zero sum. And the fact that the vast majority of activities in DeFi are pretty much speculative activities, right? Like all these DeFi products are primarily serving trading activities. Like even like obviously Uniswap is for trading, but then all these lending platforms, they also serve margin trading or yield farming. And then insurance, right? Currently it's serving the traders who need to insure against, or the yield farmers against the collapse of the platforms that they farm on. DeFi right now is by and large zero sum, but it doesn't mean that in the long term it cannot become positive sum, right? The under-collateralized lending that I mentioned before, that's vastly positive sum. The ability to borrow money to start a business, to start a venture, that's the cornerstone of capitalism. It's not zero sum at all. Hopefully we'll get there, but it might take a while.
Yeah. And under collateralized loans, Andy and I have a friend over at MakerDAO, and I always press him on when is Maker adding these under collateralized loans? What are they going to look like? Because that goes into kind of my belief system on just, how messed up the credit score system is, especially in America. I'm not sure, how it exists kind of in the rest of the world, but that does seem like almost the next logical step after what we're working on now and what crypto is building on.
Yeah, that's what 𝗵𝗶𝗏𝗵 is working on hella. Well, it's coming, but it's the Sparta thing. They have like under collateralized loans with a credit-based DAO that effectively allows people to take those loans and other people put up the funds to kind of make the loan collateralized, if you will. And so you basically trust somebody else to do it for you. That's super positive sum. Like that is a ecosystem that will work until there's a defector, who says, screw this, I'm not paying this back. And I was reading this Bankless post. I think it was either Ryan or David Hoffman who wrote it about the Moloch idea and how there's this greed and this badness of human coordination that is causing like for example all these rug pulls, et cetera, and they're arguing that Ethereum could be a social coordination mechanism that basically tries to slay and eliminate the ability essentially to allow humans to wrong each other, which kind of comes back to that zero sum idea. One little kind of off tangent thought is I think the Uniswap airdrop was positive sum. There's no way to argue that. They basically just gave people money. That was positive sum at its very core.
Yeah. I wouldn't argue with that. I do think Uniswap has some positive sum aspects for sure. It'll be interesting to see because
and then lose value. Yeah.
Did some people miss out and then buy the token and lose the token and then any price appreciation from there? Is that zero sum? Probably. But I agree with you. The aspect of airdropping, I guess someone could argue that Uniswap could have been sold to private equity. Maybe Uniswap is losing that value and that's how it becomes zero sum. So I think there is aspects there, but as far as the general public and the community, I would agree with you that it is positive sum. And yeah, especially with what Acropolis is building, and I think Yearn has some insurance mechanisms as well. Decentralizing credit, to me, seems like the next logical step. And that's going to incorporate a lot of insurance mechanisms because there is an aspect of trust when you have under collateralized.
That's lacking big time right now. Like the insurance that's underwriting Qiao, I'm sure you're aware of this. I think there's $100 million that's underwritten by NXM or Nexus Mutual right now versus 11 billion in DeFi locked.
Yeah.
Yep.
Yeah, it's quite a bit. Yeah. Well, we are about out of time here. We got a few minutes left. Rob, something for you that I've got is a DeFi narrative for the masses. A slogan, a tagline. Making it easy for them. Qiao, feel free to chime in here as well. What do you guys think about that? What concept can bring the masses to the idea of DeFi? What is that concept there?
So I'll kind of play off something that Qiao mentioned earlier on how Bitcoin was the first narrative, and the narrative around that was be your own bank. Well, now what DeFi enables is an individual, anyone, they can be someone else's bank, and they can lend and they can generate all the interest and all the profits, losses that any other bank or institution would generate. So it's not too creative, and it kind of, I kind of stole Bitcoin's narrative, but I'll go with a narrative for DeFi: be someone else's bank. You don't have to be just your own. You can help someone else kind of facilitate their own banking as well. Qiao?
I generally agree with that narrative, but I think it will take a long time to play out. I just want to be very honest with myself and the audience. Retail doesn't care about decentralization. Retail doesn't care about banking the unbanked. Retail doesn't care about freedom of spending your money and all that crap. I think retail cares about is money. So what is the short-term narrative? I think it's the yield. It's the 8% yield that DeFi can offer. That's what's going to bring the retail into DeFi. And I think the 8%, even though there's some counterparty risk there, right, it's still very well priced. The risk reward is still better than putting your money in the bank account, earning 20 basis points per year. So the risk adjusted return of DeFi is still very attractive right now. I think that's what's going to bring retail into DeFi in the short term.
Yeah, and I assume you're speaking about stablecoins, which is also a concept that has been, I think, is going to bring more people in than crypto itself, than Bitcoin or Ethereum. Is instead of having your money in a bank, just put it in these stablecoins, and then you can earn this APY through it. And there's quote unquote no risk. Obviously, there's a bunch of risks, but there's no FDIC insurance and all that stuff. But that idea of the yield, obviously for people who want to make money is there, and that's something that I think people in DeFi almost take for a bit for granted. Just that ability to put some stable coins into a protocol and earn 5% a year, if you have any sort
crazy.
Of you could start a hedge fund on that.
Yeah. Yeah, you're gonna outperform 90% hedge fund.
You could raise $1 million and start a damn hedge fund on that. Hell. That's actually really interesting. So Qiao, do you have any interest in that? Do you want to start your own firm or your own fund, or is that just too much?
It's too much. I don't like dealing with LPs, to be honest.
Yeah.
Unless they're super smart and understanding LPs. I'm pretty happy with just managing my own money right now, but maybe at some point, we'll see. There's
a lot of risks that come in with that.
Yeah, indeed.
Well, Qiao, that's about all that I got. It was an absolute pleasure. Rob, do you have anything else that's on your mind? I'm brainwashed.
No, it's been a great time talking to you guys. I love what you said about the stable coins. I do think that it kind of provides the need for retail. And what I mean by that is, in previous cycles, Bitcoin, we saw FOMO, and it's because, it was really the narrative, all these other people are getting rich besides me, I need Bitcoin. And I think that's paralleled in institutions, maybe for the next cycle. All these other institutions are engaging in a deflationary asset. What the hell am I holding on to $500 million of cash for when I'm losing 2% in inflation? So providing that need, people want to make money. Maybe that's the narrative short term, but
it's got a product market fit.
People need a need to really enter the market and take the initiative. So when we see state-owned stablecoins or state-backed stablecoins and there's no more cash, maybe that takes 20, 30 years, but I think that kind of engages people in it, and it pushes them over the edge into, well, now I need to learn about crypto and Bitcoin and stable coins. Whereas before, I want to make money. Maybe this is a good place to make money. I'll go look into it. Getting people into the need category, I think, is really what pushes them.
Yeah.
Other than that, that's all I got.
Wait, Qiao, real quick. That news today from the UK government about banning derivatives and any sort of exchange traded notes in the UK. As far as, FTX and eToro and those exchanges goes, kind of your thoughts there, but also more importantly on synthetics and even like open and stuff like that. What's your take? Bullish, bearish, bad, good? I've been in Telegram a bit today and people are kind of going nuts about it. What do you think about that?
I haven't looked into details, and I'm not a regulatory expert, but it's definitely an issue. I mean, everything that happened over the last week, right, with this UK thing and the BitMEX, all these things are threats for DeFi founders. They need to take this very seriously. They should have taken this very seriously a long time ago, but they should definitely take this very seriously now. And unfortunately, one of the things that I'm really excited about in DeFi is the synthetic assets, which I mentioned at the beginning of this podcast. But banning derivatives is bearish on this sector, right? Because these synthetic assets are derivatives. They're derivatives on some underlying assets, right? So, I mean, you can also make arguments that this is bullish in some ways. I mean, for everything that happens, there's always some pros and cons, right? I mean, the bullish part of this is, I do think the derivative market in crypto is way too crazy, like 100x leverage. People don't need 100x leverage. In fact, I don't think people need leverage at all to make money, to make a lot of money. Like, you may need like maybe 50% leverage, that's it. That's what Warren Buffett did. Warren Buffett only needed like maybe 100x leverage, or not 100x, 100%, so 2x leverage in his lifetime to make a killing, right? You don't need that much leverage. Like that much leverage is, for me, it's detrimental to the market. It's what happened in March with all this deleveraging on BitMEX that caused Bitcoin to crash from like 9,000 to 3,000 within a day or something like that. Leverage is bad. Like, among all the regulators around the world, I think the derivative regulators are the most beneficial to market, to the healthy functioning of the market. There's a reason why these CME futures are not offering 100x leverage. They're heavily regulated by the CFTC in terms of how much leverage, how much margin they can provide to traders. And so I can see arguments for this event, but there also, there's always pros and cons.
Yeah. I mean, I'd be lying if I say I didn't get wrecked on BitMEX at one point. I mean, I think everybody did. It's kind of a rite of passage. I mean, it happens. Yeah. Alrighty, guys. Well, yeah, that was awesome. Good stuff. And yeah, thanks for coming on, Qiao. I really appreciate it. Obviously, guys, we did talk a bit more about trading and markets on this one. So just be wary that we are not advisors. This is all for information and education. There's no advice here. There's no financial advice. We are amateurs in this game, just having fun and learning. So please be aware of that. But other than that, thank you so much, Qiao, for coming out. Rob, it was great. You guys killed it.
Likewise. I appreciate it.
Definitely. Thanks, guys.
Take care.
Thanks for listening to the DeFi by Design podcast. Until next time, DeFi Slate Team.